YouTube? We back with another video. It's been a rocky week, not gonna lie, but we're gonna dive into it. I finally got TradeZilla, so this would be a perfect time for anybody that's new, that's starting to trade, and you wanna start documenting because you're only as good as your next set of series of trades. Whatever your sample size is, you're only as good as your next series of trades. And the only way to get better is if you document what you did right or wrong the previous one. So brick by brick is kind of how you want to have that approach. And I think TradeZilla does a good job with that as far as the platform and how it's set up. But we're going to go ahead and get started. Well, before we get into that, I want to show y'all this. Just so you guys know, I'm not just saying this to say this. Like, I've documented. I have documentation upon documentation. I have stuff that goes back a while. Grades, setups, trades. I got stuff from 2023 in here. So if you're not documenting your trades, I highly advise that you start. And it's kind of, for right now, it's kind of the best thing I can do as far as showing you guys like live trades, like documented trades live. So when I'm taking these trades, I'm giving my analysis in live time and putting that on here on TradeZilla and on my actual notes on the charts. So here we go. We're gonna go ahead and take a look. So far on the account, I had a total profit of $1,128. My trade win percentage is 54%. My profit factor is a 1.34. My win loss ratio is a 1.12%. So my day win percentage is 40%. As you can see, let's take a look back in July. I had some good weeks. I had some bad ones, but overall, July I was profitable in July. 581 this week, 321. Had a bad week this week. Had a good week that week. Had a great week to close the month. And then this week has just been, not this week, this month has been kind of, it is what it is. But the key in this video is what I want to show you guys, and this is something I just learned as well. This is what I've learned as well. Taking trades is all about timing. Like, I used to want to be the person to always want to get into London, but understanding it's like the quicker you get in before the move happens, you leave yourself susceptible to the wash or the manipulation of whatever's going on, for that specific instrument. So what I mean by that is, so you have three sessions. You have the Asian session, the London session, and the New York session. Those are the three sessions. Some people trade Asian. Asian, you're going to get your impulse one direction or the other. It's going to be a buy or a sell. And then in the London, you're going to get the distribution of orders. So what I mean by orders is all the people that either chased it or is chasing the reversal in either direction. The market maker is distributing the orders of that movement. So it's going to be a lot of choppiness, and I'll show you guys some examples on here. I have great notes. And then you have the New York, which is going to be, high volume. It's like the whole world, the whole United States is jumping into the market at the same time at the 9:30 bell. So what I noticed is I've been trading the London into that reversal in the New York, and in that time gap, it's like, yeah, you can be ahead of the trade, but are we trying to be in the right move and preserve capital, or are we trying to be right? We're here to make money. So I had to take a long look at myself. I'm like, getting in early and being first that's not the name of this game. You can front run, the move, but we're here to take 100% guaranteed, type of setups that we know that work in our favor. I'm not saying I'm gonna win every time, but this specific type of setup is going to be consistent, and you won't be susceptible to all these whips and lashes within the London session. So let's jump back in. So first, I'm gonna go back to my daily journal. Not my daily journal, but my notebook. So these are the 3 trades I took. I took a trade Tuesday, I took a trade Thursday, and I took a trade Friday. Let's go over the Tuesday one. So the Tuesday trade that I took was a $93 loss, and I took one trade on the gold contract and then one on the Qs in Q. So let's look at the gold trade and where I went wrong. Not the gold trade. Why is it not popping up? Okay. So I guess we're just gonna have to go into it live. So let's bring it back. Let's bring it back. We're gonna replay it, replay it, replay it. So here's what I mean, right? I'll even go back a little bit further just to show y'all what I mean. We're gonna come back right into a little bit farther. We're just gonna start it from the top. All right. So here's what I mean about the different sections, right? Not sections, sessions. So let's look at this. So in the Asian, you had gold. It's going. It's gonna make an impulsive move. In this case, it's accumulating. And as we get towards the end of the session, we start to get an exaggerated move to the bottom, right? Cool. Now, what is the London gonna do? It's gonna accumulate. It's gonna distribute all of the orders of the buy and sell in this whole price action throughout the session. So watch. Came back, took out all the people that chased, got all the buy stops. Buy stops are orders placed above the resistance point. So if it was to break out, people can instantly be into the trade. And it's distributing it back. It got all the sellers, now it's distributing back all the people that have buy stops, taking their money. So in this case, it's called shorts, right? Or paying longs. And then it'll be longs paying shorts. So, yeah. But I got in here. Now, mind you, I got into a buy here because why? I seen that we stopped out. We stopped out this daily low, right? From the previous day on Monday. So the likelihood of us coming back is little to none. And then we had the close on a higher time frame of the 50 EMA. So I went long. And I was at a higher time frame demand zone, which is this box right here. And I got stopped out because of the distribution. Not understanding that. And I'm not a perfect trader. I've been doing this for a while, and sometimes the London does work, but I feel like to get a better sample size of what I'm doing, you have to take the same type of entries consistently during the same time and during the, it makes it a lot simpler. So that's just something I have to work on. I actually end up getting another challenge. So I close this one because I need to get a fresh actual sample size of what's my P&L, what's my win loss ratio, what's my biggest movers, what's my actual good instruments that I trade, and I can gauge them all because I'm treating them all the same with the same with the same edge essentially. So, but yeah, and then distribution of the London, and then watch what happens in the New York. The New York comes 9:30 candle. We get the whip up higher. So now this higher move, we waited to after the wait till after the open. You never want to enter in before the open, and that's something that I've done that I'll show you that I did on Friday, which isn't totally against my rules, but you'll see the setup. And then we get that move, and then now you can enter into a trade. So we got the clear stop hunt of the London, and almost the Asian. So if I wanted to, and I was trading this during the right time, I could have slid this box up and seen that, oh, okay, we tapped into this liquidity zone, and then enter shorts. Paid. You see that? This would have got me paid had I just waited. Literally, had I just waited and been patient, this is a move I could have took. We risking eight ticks for 20. That's more than a 1 to 2. A little bit more than a 1 to 2. Simple. Off simply just waiting. So that was a trade that I took, got the loss, but I'll show you the NASDAQ trade that I took the same day. So I seen that we had news. Waited till after the 9:30 open, right? So 9:30, we got the impulse. I knew it was coming back down. We had too much to recover from this impulsive move, right? The range that got set before the news dropped. So we came back. We got this hammer candle here. We got this hammer candle here, and I waited because this next candle could have driven right back down, and I could have got even a lower entry. So I waited, right? On the 15-minute, this would be the 50 EMA. This would be the 200, right? And so we came and closed above the 200. And I waited, right, until this candle came back in live time, because I knew once it pierced off of here, we were going back up. And I got in here for the longs. I got in here and got out somewhere near here, about 84 ticks, right? Had I held it, could have went a lot higher. Let's see how it played out. It went higher, right? But I seen we were getting kind of later in the afternoon, and I cut here. So I got in here to here. This trade kind of made up for the gold loss, but it's all in practice. It's all the same kind of thing, that I started to notice. And it takes a lot, man, to sit there and really look at yourself as a trader and be like, okay, what am I doing wrong? Because you have to be the enforcer and the regulator, or you have to be the critic and the doer. So taking a look back, like, just enter in, wait till after the New York, and these types of setups will present itself to you. And if it don't, cool. But at least I'm not sitting through all of this stuff here, like, all this choppiness. Like, why would I want to do that to myself when I could just wait and get a clear entry somewhere outside of all this distribution and this accumulation, right? So that was that trade. That was Tuesday. Let's go to Thursday's trade that I took. Oh, this is a break and retest that I had on pound. So let's go to it. Let's go to it. So we were here, right? Let's take it back. Let's rewind. And I don't know why my notes for the trade are like not on here, but we'll figure it out. I remember which trade we took. So here we go, right? I seen we had news. We got some strong data, some strong readings from the U.S. dollar. I knew we're probably going to be short, so I waited. Now, typically, seeing something like this, knowing that this is the 15-minute, EMA on the 15 minute, right? This is the 50 EMA on the 15 minute. I could have closed. I could have waited for the close, and typically I would enter in something like this and come down here, right? And I would have had a. So this is probably what 19 ticks for 34. So roughly almost a 1 to 2, right? But I didn't. I said because only this could also happen, right? Let's look at it. We had failed sellers. Failed sellers, meaning price failed to go lower. Failed to go lower. I could have easily got caught in a situation where price broke back above. I don't own the markets. I don't run the markets. I can't I can't tell the market to, oh yeah, go down because you follow my rules and now I'm going to enter. Yes, I can still enter the trade, but the market doesn't have to abide by that because that's a part of my rules. That makes sense. So the price could have easily bounced off of this 15-minute 50 EMA and continue higher. So I said, you know what? I'll wait. I'm gonna go against the grain and try to adapt this new mindset, right? In live time. So what I noticed is we closed above. I mean, we closed below. We need to go. We need to fast forward. We need to fast forward. Fast forward. My bad. This was Thursday. Thursday. You know what? Let's just get out of replay altogether. I can show you guys live. Thursday was just a couple sessions ago. All right, so here we go. Trades marked up. This is a lot better. Sorry, guys. All right. So again, I seen that we broke below previous Friday's low, right? We retested. This is the um 13 EMA, right? On the 15 minute. So we broke, retested, and we literally touched right literally below this liquidity box, right in my zone. Now, this is a little tip. This price action, they call it a quart of wood. It's called a COW. Look it up. It's called quart of wood. It's when you have a compilation of bullish and bearish candles, and there's gonna be four of them, and they're all gonna be like the level kind of equal size, right? So I went short here, and I took it right down to the 800 EMA on the 5 minute. You can use the you don't have to use the indicators specifically for entries. You can also use them for take profits as well. I wanted it to come down here, but I seen it starting to kind of level out here off the 800 on the 5 minute, so I just took it. You'll have some of those, but so 30 ticks, and I risked what 18, well more than that, like 20. Could have choked down some more on my positioning. I could have put it down here at the close of the body instead of the wick. That would have got me closer to a 1 to 2, but nonetheless, the principle on this trade was for me to wait for the New York. After the New York, watch the setup present itself and enter based off of my normal entries. It's all about timing, though. It's the timing. My setup and my method isn't bad. It's just I get stuck in timing sometimes, which causes me to lose trades unnecessarily, though. So typically I would have entered something like this at the 8 o'clock candle. This could have bounced here, wicked back up higher because we have equal highs up here, and then I could have been stuck. But now that I waited for the news to die down, waited for the break and retest off the 13 EMA on the 15-minute chart, right? And I took the sell, close for profit. Now the last setup I want to show you guys is a setup that I took Friday, and like I said, I know I don't trade Fridays. Was very was very boneheaded of me to do it, but it made sense. So I ended up giving back half of my profits from Thursday on this trade, but it is what it is, you know. We live and learn. So I love the Russell. Came here on the Russell 2000, right? I seen on a higher time frame, we took out this liquidity. We took out this low of Tuesday, right? We pierced off of it, came back above, and now I'm coming to the charts around 6:30, 7 o'clock, and I'm like, even though I know that I'm supposed to wait, I cannot notice, but we have this anchor that took out this liquidity point. We have the anchor here. We have what we call failed sellers, right? We got failed sellers here. They didn't continue to bring the price lower. We're bouncing off the 200 EMA on the 15-minute. I'm getting the close above on the 5-minute of the 50 EMA. Almost the same thing here on the 15 EMA as well. So I went long, right? This isn't a bad trade, but again, the method, the theme of what this is all about timing. Sometimes you can have the best trade setup, but you're getting in the time of distribution and accumulation, stuff that you can't control. Literally, stuff that you can't control, but you can control when you get in the market. So, knowing that we still had news to drop, right? I think it was CPI news. I had a while until 9:30 hit, right? So once I seen this trade didn't it started to kind of dwindle out, I closed the trade. Instead of me wanting to be right because everything matched with my system, even though I had all of that, I didn't go on tilt and neglect the fact that I'm supposed to be waiting for 9:30 and we had news, right? I could have went full tilt and blew my account, quite literally. But what did I do? By me understanding that and understanding that it didn't go in my favor before the 9:30 open, just closing the trade was the best thing I could have did. It's risk management 101. It's the name of the game. So these are some setups that I took from the week. I hope you guys have some takeaways from them. I also want to let you guys know, like I said, I have the new account. I have the Top Step X account. So it'll be a little bit different as far as like documentation. I won't be directly on TradingView, but I'll still go through the weekly setups with you guys and dive in on what's going on. So appreciate you tuning in. Please check out TradeZella. Document your trades because you're only as good as the last set series of trades that you took. So document. I'll hold myself accountable and see how I perform the rest of quarter 3 with waiting on the New York to open before I take a trade. So, yeah, you guys, thanks for tuning in. Leave a like, comment, subscribe. Let's keep growing. Let's go.